First of all, a big thank you for all of you to make it here today in the afternoon. Some of our guests could obviously not make it with some of the flight disruptions that we have had in the region. We have a power-packed day later in the day today, and I would specifically like to thank the panelists who are also here to share their experience and their knowledge with all of you. In addition to this, I just wanted to tell you that during the course of the day, we have an interesting award that we have instituted this year as a responsible asset management company. The younger generation obviously consumes financial knowledge from digital media. And for the first time, since many of the regulators, whether it is the RBI governor, the SEBI chairman, or the finance minister have lamented about mis-selling of financial products, we were visionaries in that respect. We instituted this award much before some of these guys talked about, and we have instituted an award for the best financial podcaster, broadcaster, as the case may be in terms of, and we've had a very interesting and challenging time picking the winner. Later in the day, after Mr. Kotak's address to us, we will be having the awardees here as well, and we'll be handing over the award. And now that I do have you as a captive audience, I have no choice but to do a little bit of marketing, a little bit of education about what we have done so far, and tell you about what we've been, how Kotak Alts has shaped up. We are in our 21st year of existence. And first of all, I'm very proud of the entire team, and I was telling somebody outside while we were having tea that I run the place, but I don't know what's going on. Most of these guys actually do the job. And I'm very proud of a team which on average has been consistently with us for more than 20 years. This is the leadership team of the firm. Many of the leaders are here around the table, and they bring with them what I call the institutional memory and the institutional discipline and culture of the firm, and the ability to retain very talented individuals who have been able to deliver year on year for more than 20 years is a key differentiator for us as a firm. In an era where in financial services, as many of you know, people keep switching jobs every few years, I'm very thankful to the leadership team who has also mentored the next level of leadership to be here and to be delivering for you as investors and customers. Last year has been a pretty interesting year for us. It's an year that defines scale. It defines our relevance for the market in India, and of course, more importantly, in terms of performance. We are a very significant player in the alternative asset management business in India. Our investments last year alone was about 11,000 odd crores. And most importantly, in India, many investors have globally told us that it's easy to invest in India. Oftentimes, people quote Hotel California, where they say, you can check in any time you like, but you can't check out. But if you see the number in terms of number of exits, 29 exits versus 25 investments, and nearly 7,700 crores worth of exits. This is a very, very significant number. Very few firms have been able to achieve this kind of number, particularly in the last year, and this has been a consistent performance over many years. We handle assets across 4 major categories, whether it's private equity, strategic situations, private credit, or infrastructure, and of course, real estate, which is a very significant component of our asset management business. Why and how do we do this so far? I think there are 4 pillars of what we do. The first is that we have direct relationships, and our origination engine is far superior to a lot of others. Many of our relationships are the basis on which we are able to get some of the stalwarts here as part of the panelists. And the second, I would say, the pillar of our ability to participate in the market is to provide structured financing solutions based on what is the cash flow of the business, what the founder of the company actually requires. It's not enough to just put money out, but you've got to watch it in terms of making sure that the money is being put to the use that you are intended it for. So post-investment asset management is a key pillar of our ability to manage exits. And exits in India, you should be able to manage exits in multiple formats, whether it is private credit, strategic sale, IPO, and I think the team and its competencies covers all of these, and part of the exit number that you saw in the previous slide was essentially the fact that we are able to structure and execute across all the formats of exits. Couple of examples as to the 4 pillars of what we do and how we do it. Matrix Pharma, India's second largest API manufacturing platform. This was a business that was originally sold by an Indian entrepreneur to a multinational called Viatris. We had a direct relationship with both the ex-founder as well as the management team of Viatris in the US. When Viatris had to sell this business in India, we were able to access the management and get an exclusivity much before a detailed global process was run. And that exclusivity enabled us to structure the entire investment and buy this business, which happens to be the second largest API manufacturing platform in India, at an enterprise value of approximately 4,000 crores. We underwrote and structured the entire investment. We invested about nearly 1,500 crores as a convertible structured equity in this particular company. And we currently operate it. Some of the management team members of the company are here with us. We are very proud of this particular outcome. And this is an example of our ability to directly originate transactions, structure, underwrite, and execute at scale. You know, today and the last few days, every day, the newspapers have been talking about data centers. And I have Sharat Sanghi here, who's probably the father of the data center business in India, having set up the first data center in the country. And I have my other colleague, Rahul Shah, who actually funded him in his previous avatar. And when Rahul came to us in 2020, and when we were starting the next fund, he said, look, this is the area that we really need to go to. There's going to be a very significant growth in this area. And we decided that we need to sort of make sure that we have an investment portfolio in this particular sector back in 2020, just as we were coming out of COVID. So it's a very thought through issue in terms of what sectors we want to invest in. And we invested in SIFI data centers in 2020 when data centers was not a fashionable mainstream investment theme in India as it is today. And thanks to Mr. Trump, it looks like some of the data centers from the Middle East also have to move here. So everybody in the data center business is in a good wicket. So essentially, we like to be ahead of the curve, and SIFI is an example of that. This is an interesting case where, again, due to the COVID crisis, the company was staring at a debt default, and they were planning to meet the obligation of the debt repayment by selling one of their prized assets. We had a discussion with the founder. This is a chain of hotels, and they were going to sell one of the prime assets. And we said that's not probably necessary. We could do a structured financing solution to meet with the cash flows. Remember, at that time, hotel occupancies had hit another, and it had not yet come out of the down cycle. We were able to put in the capital and give the company a back-ended capital solution, avoid the sale of a strategic asset. And all of us know how hotel industry is doing. Some of our colleagues here and friends here have asked for hotel rooms to be fixed up because they could not get hotel rooms here. So it just goes to show that we were able to provide a solution to save the asset, and we managed to get our own collateral. And these are hard asset collateralized structured credit solutions, which now we got refinanced out about 7.5%, 8%. Another example, in India, a lot of entrepreneurs, and particularly on the real estate side, people get ahead of themselves in terms of how they want to run their finances. This was a classic case. It's a very significant and large project. A massive amount of the inventory of the company was actually pre-sold, but it was sold in a structure where the investor or the buyer was paying only 20%, and the balance 80% was going to be paid on possession. Where the issue was that if there is any delay or the cash flow gap in terms of actually putting concrete to work and build the asset is where the developer had not seen the potential gap in the financing. When our team went in, did a very detailed analysis of that, we found that there's going to be a pretty significant gap. So we did the entire financing for this entire asset, nearly 1,100 crores of financing, zero risk in terms of cash flow closure, zero risk in terms of cash flow coming back, and the asset is being delivered as we speak. This is an example of where we go in with control mindset. This was a company which was a toll asset which had defaulted to the banks. We did a one-time settlement at about 800 crores and took control of the asset, improved the quality of the asset, changed the collection pattern, and make sure that all the leakages that were there in that asset were plugged. As a consequence, the credit rating of the SPV in which the asset was sitting was upgraded, and we've already, through a refinancing, already received more than 1,300 crores against our 800 crore investment. We took the equity for free when we actually took into this asset. That equity, we have already contracted to realize an additional 280 odd crores, generating about 24% return for our investors. And finally, just to summarize in terms of where we have reached in the 21-year journey, we've raised about 80,000 crores of assets, 4 distinct asset classes in which we operate in, more than 200 private investments. Very few firms can actually talk about this kind of numbers in terms of private investments. And we have a 0 default track record over 20 years in our credit investments. We manage assets in return ranges between 16 to 25%. It depends upon the strategy, it depends upon the asset class. And we are very proud of that track record, and it's all due to the team that I mentioned earlier and the leadership that we have. And since I have the mic and you are captive to listen to me, I have the opportunity to tell you what are the new funds that we are raising. So there are 4 pools of capital that we are in the market for. Special Sit Fund 3. The first fund was $1 billion. The second fund was $1.5 billion. The third one is going to be $2 billion. We already have existing investors who are re-upped, and there will be a gap of about $200 million for additional investors to come in. The real estate fund is another 4,500 crore target fund size. Again, we have international institutional investors participating in this, and we would be reaching out to other investors on this. The yield and growth fund, you might have seen the press release. We've already done a close at about 4,000 odd crores. Target is 5,000. We expect to hit that number by end of March, early April. And the last but not the least, we have always had a special focus on life sciences and healthcare. And this is a fund which is actually investing in innovative life sciences companies, early stage, early growth companies. With that, I do hope that you continue to support us, and I look forward to the panel discussions later in the day today. And thank you for being here.